Welcome back. Thanks for watching Smart Money on CNBC-TV18. Today we're speaking to Aashish Sommaiyaa of Whiteoak about the opportunities in the mid-cap space, especially the mid-cap market leaders. And very interestingly, if you map the last 5 or even 10 years, or even 15 years for that matter, mid-caps have outperformed in a big way, outperformed both large as well as small caps. But Aashish, I just wanted to understand currently what situation are we in as far as either regulatory or policy tailwinds are concerned? What could drive the mid-cap performance in that sense?
Yeah, so we did make like a brief mention in the earlier part of the conversation, which is very important, that if you see post-COVID, and I personally, if you really ask me, it's not just post-COVID, it's even demographics and it's even the macroeconomic construct. But post-COVID, there is an accelerated discussion about manufacturing being diversified, supply chains being diversified, and a lot of industries moving from China to say countries like India. There's data to say that almost 35 to 40% of that moves to Vietnam. But Vietnam is a different case, because if it's a Chinese business diversifying, they might choose Vietnam. But as far as multinational companies are concerned, they are choosing India. So 20% of all manufacturing which moves out of China comes to India. And that's why the government obviously has announced these PLIs, right? So all the PLI announcements are related to auto ancillaries. They are related to electronics components, white goods, EV batteries, many of those like, pharma APIs, chemicals. Now, all of those, that's a big change in policy. The government is really incentivizing. We have 15% in tax for new businesses. On top of that, there are these PLIs, which are like cashback kind of thing. So all of these sectors which I named and subsectors, they are not large cap. There's no large cap companies in these sectors. Fully populated by mid-cap and to some extent small cap. So that's one policy tailwind. The second thing is everything related to our regulations and governance. So if you see consolidation because of GST, increased tax compliance, more boost to the, hit out on the parallel economy and more move towards formalization.
Actually, more the need to invest in mid-caps and market leaders, right? I mean, increased tax compliance is something that sometimes small companies can't get up to speed with. So, and even consolidation.
So all the market share gains because of consolidation, a lot of those things, if you take these whole sectors which are related to home interiors, like wires and cables and electric fittings and fixtures, if you take tiles, if you take paints, right, a lot of the white goods and consumer related stuff. So wherever it is formalization, consolidation, PLI, government policy, lot of those things are happening in this space which happens to be populated by mid and small cap companies. Because like I said, the large cap index has a lot of big IT companies, global commodities, cyclicals, metals, oil and gas, those kinds of things. So that obviously is not driven by what we are discussing.
Okay, so give us some examples, right? I mean, which are the mid-cap companies, and I want to give that disclaimer right away that these are not buy recommendations, but which are the mid-cap companies that are not just market leaders, but have the potential to become large caps over the next 5 to 10 years?
So this is the holy grail, right? Because everybody invests in mid-caps in the anticipation, like, all the examples I'm giving, whether I speak of per capita, whether I speak any of these things. Ultimately, the point is that these industries or these sectors will come of age, they'll come of scale, and a lot of the mid-caps will eventually become large caps. So if I can give you I gave you 2 examples. Let's say, for example, there's one outlier, right? Say L&T Infotech, till very recently, used to be upper end of small cap or just a mid cap, and it's become a large cap. So there are very few examples that in a 5-year holding period, a small and mid-sized company actually becomes large cap, right? And we did some data crunching, which actually says that if you hold the mid-cap index, like a chemistry lab experiment, you hold the mid-cap index for 5 years and just go away, come back 5 years later, 40 to 50% of those companies will remain mid-cap, but give you a decent return. There are still 15 to 18% of the companies which have a track record of moving from mid-cap into large cap and giving outlier returns. So what are these examples? Like say, for example, if you see, I just mentioned to you, like Titan, for example, was a small company or a mid-cap company and then became large. Now, if you look at it in today's terms, again, very difficult to forecast, but if you see in today's terms, a lot of the chemical space, which was small cap and has now become mid-cap. But if you look at it at a 5-7 year horizon and whatever we're talking in terms of consolidation or manufacturing and exporting, then a lot of those could actually, that space. The second one, I think, is a lot of companies in the consumer discretionary space. We discussed some examples, right? But it's not necessary that all of those would get stuck in time at 30,000-40,000 crore market cap.
So like which ones are you?
Like say, for example, a Voltas I give you, I mentioned to you. Or all the market leaders we mentioned, like say Indian hotels or, quick service restaurants, etc. So there's no reason for a country like India, which is $2,000 per capita, but 140 crore people. There's no reason why these companies would remain. I can give you another example, like say VIP Industries is one of the largest luggage makers, is the largest in India, but not just India, also one of the largest luggage makers all over the world. If I'm not wrong, is still a small cap company.
Okay.
I would be doing a disservice.
Very hard during the pandemic.
Yeah, of course. Yeah, I mean, see, that is a situation-specific thing.
Yes.
But I don't think that's going to be forever. And I would be doing a disservice if I don't give you examples from my industry.
Yeah.
So
Go ahead, please.
Yeah, so, I mean, one of the most respected names, like say, for example, HDFC is listed. They are a mid-cap company. And you know that the asset management industry has like a long way to go, whether you speak about digitization, capital market adaptation, savings and investing. So, I mean, if you see in India, next 10 to 15 years, a lot of the mid-cap space is going to really scale. And it's evident in the data.
Yes.
My guess is that if you did all this data crunching 10 years back, I don't think mid-cap would have been the best performing benchmark. But in recent times, it's turning out that way, and my guess is it will sustain like that for the next 10, 15 years, purely because of the stage of evolution that we are in.
And even if you look at it, the 15-year, if in the last 15 years, it's what, a 13% gain that the mid-cap index has given. Not bad at all. I don't know any other asset class that will give you a 13% return, unless you're doing stock picking yourself and you're exceptional at it.
Yeah.
But if you had put your money in just a mid-cap fund, right, over the last 15 years, a 13%.
Yeah, of course, we are using indices for ease of discussion, but professional managers or anybody even who thinks that he's a stock picker should ideally, do better. My guess is that this data wouldn't have been like this if you did the same data crunching 5-6 years back. So I think something has changed in our construct in the recent few years because of all the tailwinds we discussed. And my sense is it's just the beginning. It will remain like that for times to come, at least foreseeable future. Okay,
on that optimistic note, we'll let you go. Aashish, thank you so much. It was a very informative and entertaining discussion. Thanks a lot for being with us on Smart Money. With that, it's a wrap. Thanks a lot for watching. We'll be back again, same time, same place next week.